very warm welcome to all our listeners. Thank you for tuning in. I hope you will enjoy this podcast. Hi, Vijeth. Thank you so much for joining us on Bliss Business. It's a pleasure to have you.
Hi, Ashish. Thanks for the invite. Really a pleasure.
Awesome. Let's get started. If you can, first of all, tell us a little bit about yourselves for our listeners, then we'll dive deeper.
Right. So I'm Vijeth Reddy. Um, uh, Basically, I have 10 years experience with various startups. I have studied in France. I have two masters there. After working for quite some time, me and my wife, Sangeeta, we wanted to do something adventurous. We thought entrepreneurship is something pretty intense to take it as a challenge, and we kind of ended up in that. So my wife is from IT. She worked for 10 years for Unilever, Accenture, right? So we both are based out of Bangalore. Right, yeah.
So, what's the most important question? Why two masters?
To be honest, I mean, I think life happens to many Indians after engineering, right? So my third year, I took a break. uh, Started thinking, what am I doing with life? Like, why engineering? What should I do next? Right. Then I finished my engineering, and then I kind of found my interest with business, and I also realized I really like studying. Uh, France has this amazing program where you have a 3 year double master program, and you kind of get to work for a year in multiple companies to explore what you like. I kind of really like that idea. Yeah, that's it.
Oh, that's nice.
Yeah.
That's nice. That's nice. I think everyone has that, what they're doing at some point in time. I think even for me, it was at some point. So, I really like making short films, right? So, the time hasn't come yet for me to take a course. I don't know when, but yeah.
Yeah, everything needs a break. You need to take a break so that you can get to do what you want.
Yes, yes, absolutely. So then, after your studies, Vijay, so what was then the plan? You wanted to start your own, or you worked somewhere in corporate, or how was it?
Right. See, I started my first business when I was 19. I started a motorsport event company along with my friend Rashid. Uh, Back then, motorsport was pretty young. We were doing this go-karting events. Then I went to like part of my studies. I came back for an internship in India. Then I ended up again doing my second venture, which is what do I eat. We were trying to compete with these food aggregators back then. Worked for 2 years, built an app, built a team, but kind of didn't work out with the funding scenes later on. And then I went back again and I finished my second master's. I was working for a French company when I returned India. Uh, Kind of, I've realized I like building things. Um, I can't do monotonous jobs. Uh, Really passionate about tech enabled value creation, or how do we use tech to solve problems. Yeah, that's how we kind of ended up in this space.
So how did the then idea came for Kots?
Right. Uh, though I'm really passionate about technology,
Hmm.
uh, Kots is actually a real estate company, right? It's a extreme end of the spectrum. So me and my wife, back then we were still dating 2019. So we both were kind of, we took a place to stay together. That was a co-living place, right? We've realized in India, when you kind of move to a place like Bangalore for a job, it is pretty hard to find a house, right? There are a lot of challenges. Landlords will ask you for 10 months of deposit, and then we don't know how certain our life was to invest so much money and put furniture, right? Then the only option we found was a co-living space, which is really not meant for let's say working professionals who are really busy with their life, right? See, when you come back home, you want to have your own house. You don't want to be in a bachelor pad, like a lot of parties every night, right? So that's the gap we've kind of discovered, and we have realized many companies are only focusing on this PGs and co-living. And we thought, what if we kind of build a digital real estate company which is focusing on housing for 25 to 35-year-old people, try to create modern spaces and use technology to operate it in a very lean way, is how we kind of started this entire business.
Hmm. So is it true all these Bangalore memes on landlord asking random things? There are too many flooded on Insta when you go for renting out in Bangalore.
I think it is more fun than that because I've seen very funny stories, to be honest.
You have to share some.
In fact, recently I have rented an apartment
Hmm.
with a landlord,
Hmm.
and the landlord asked me the possibilities of funding. I was like, wow, like this ecosystem is
Wow.
getting. He stays in Dubai, so he
Huh?
was asking, what is your startup about? So what are the possibilities of me funding? Where did you guys do? He kind of, it was almost like a pitch deck, me giving on my life and the business. He was exploring his possibilities, right?
Wow.
In short, it is true. It's a crazy scene, right? People have a lot of they actually ask, "Are you a vegetarian? Are you, I mean, are you single? Do you have friends coming along?"
Hmm.
Lot of questions
Hmm.
before they give you a house, right? How do you maintain the common areas? Do you have a pet?
Hmm.
Pet is a no-no for many landlords,
Hmm.
right? Um,
So I remember recently, Vijay. So there was one of entrepreneurs who came onto the podcast, and during the show, I discovered where he has rented the office space. That guy is an investor, right? So
right.
they went out looking for office space, and that guy became an investor, and that sort of relation nurtured, and now they moved to bigger office in the same building, blah blah blah. But yeah.
But yeah, Bangalore is crazy right now with this funding startup. I think if you go to HSR,
Mm-hmm.
every cafe, you just have to sit, you'll get ideas,
Mm-hmm.
you'll also get how do you get funding, you'll
Mm.
also find your team there, right? I mean, this is crazy, yeah.
That's nice. Then moving on, Vijay. Real estate as a co-living, that concept you started. So let's talk first about capital. So how did you first started? What's the model? You lease out, you build your own. Tell us a little bit.
Right. So we are not a co-living operator. So basically, if you're somewhere like 25 to 35, when you want to rent a house in Bangalore, either you go to a broker and get a house with a regular landlord, or you have this co-living place where you know it is professionally managed, but however, you can't get a home experience. So we are actually trying to solve the supply gap where we give the entire apartment for rent, and these apartments are built for rent in their mind, right? So this is more like a infrastructure solution rather than giving nice cosmetics to the product or giving a community aspect to that. So
So
that's a slight nuanced difference there.
who owns the apartment? You guys, or it's just someone else? You're just passing on the lead, or how does it work?
Initially, when we started, uh, we spoke to landlords who had these land parcels,
Mm,
and they were keen on the rental income.
mm,
We kind of pitched them the idea that instead of building a PG or a co-living where you have much higher risk, why
mm-hmm,
don't you build flats and
mm-hmm.
we will rent out the flats from you on a fixed rent. That's how we started. But
Okay.
currently, what we do is we have the market insights
Mm-hmm,
on the supply demand gap, what configuration, what location, what price.
mm-hmm.
And we have professional or kind of semi organized investors who are looking for capital appreciation for property as well as a rental income. So they acquire the parcels and they build for us.
Okay. So there are three key people involved. First is your investors, which you identify those property and they build for you, and then you guys sort of rent it out.
Yes.
Understood. Understood. So okay, interesting. So what is the question which comes to my mind is what sort of difference does it come into this particular model versus the traditional PG renting model? Is there a premium you guys are charging, or what is it?
Right. So let's think Cots is a platform. There are
Mm.
two ends of this platform. There's a tenant and there's a landlord.
Mm-hmm.
See, for a tenant, uh, if you are somebody who's seeking hostel, you're okay with shared spaces. You're usually younger, but after a certain age, after you start getting a certain salary,
Mm-hmm.
you're looking for having a private space or you want to have a home, right? This is an untapped market. So we solve for these tenants, young tenants. 51% of our customers are families, like
Okay.
30 years old couples, basically who move to Bangalore for jobs, right? Now they can't stay in a co-living, they can't stay in a PG,
Mm-hmm.
so they have to take a traditional landlord building, right? Now the
Mm-hmm.
problem there is, let's say you go to a nice website which is an aggregator,
Mm-hmm.
what you see online is not what you get.
Okay.
Second, lot of brokers put irrelevant listings to get your attention, but in
Mm-hmm.
reality, most of the listings are not relevant to you.
Okay.
So, although they aggregate information, because they have no control over the inventory,
Mm-hmm.
the experience is still a very big challenge, right? So, imagine we are a discovery platform with the operation model
Mm-hmm.
as well as the entire project is with us. So we can give a much more better experience to tenants,
Mm-hmm.
and our inventories are a lot more relevant to the new age tenant. For
Okay.
example, our kitchens are smaller because
Mm-hmm.
not don't cook, but you have a larger balcony,
Mm-hmm.
more open spaces, right? Coming to the landlord part, now in India, for real estate investors, you only have commercial sale, commercial renting, and residential sale. We don't have this category of residential renting as a professional category in India. This category is quite big in US, in Europe, right? Partly the reason is the yields are 1 to 2%, lot of hassle. You give an apartment, you're not sure if a tenant will leave. Managing has its own risks, right? We are kind of enabling and kind of building that ecosystem right now. We kind of guarantee a 6 to 8% rental yield. Our landlord is actually our customer here in this case. We give end-to-end management of the project. The cost is on us, not on him. And he doesn't have to worry about occupancy because we are renting on a fixed rent, right? He's not exposed to the risk of occupancy or maintenance in this case. And
Mm-hmm.
whatever rent we pay, it is going to go towards his EMI. Now, this is a big difference because in a co-living, you're dependent on the operator, and PG or co-living business is not stable throughout 10 years, right? You'll always have ups and downs in the market. And in co-living business, when something goes down, it goes
Mm-hmm.
with rock bottom.
Mm.
And real estate investments are huge to think of that scenario. But in a residential case which we are building,
Mm-hmm.
our tenants give us 11 months commitment.
Okay.
So the business is pretty predictable. And hence we can give them a 11 year or as a 9 year assurance. What will be the rent looking like?
9-year
Yeah,
assurance.
correct.
Okay, interesting. Interesting. And so, how are you able to then? The question comes to mind is, so how are you able to optimize, or what is that value add service which gives you the leverage to charge to yield, which gives a yield of 6 to 8% versus 1 to 2%? Is it um, operationally you're driving, or how is it coming?
So this happens at multiple layers.
Mm,
First, it starts at the product level.
mm,
I'm a big fan of PaaS model, right? So we started thinking in that product as a service method. So we understood a lot of real estate in India is actually built for sale in mind. Now, a product built for sale is not the good product for renting. For example, if you build for sale, most probably your house is little larger, more decor, which
mm-hmm,
will push your capital quite high. In a renting business, it's more functional, spaces are optimized, right?
mm-hmm,
To give you an example, a 1 BHK with us, a built up area is about 400, 410. But in a regular apartment, when you buy a 1 BHK, it is 600, 650, right? Now, this instantly improves your rental yield. Second part, we operate where there is actual physical shortage of supply. Now, in India, we have rapid urbanizations, right? Many cities are growing pretty fast, but not every part of the city grows in the same way. There are some parts of the city where you have uh, higher salaried people are moving in, and the infra is not catching up. So, if you can have products where their supply is less, you would be able to charge a premium, right? Third point is you bundle it with higher relevance, matching products, and maybe you package it with additional convenience and services like housekeeping or anything you want to upsell to them, right? That also drives a little higher premium in the end. So these three factors are helping us to push the rental yields.
understood. Very interesting. There was this sort of reminds me, I think it was last week or a couple of weeks back. So I'm part of a fund where, just like a mentor. So there was this company and they were trying to solve a problem in real estate in but Saudi. It was interesting insight in Saudi. Apparently, if someone wants to rent out, they need to pay a security deposit of either 6 months or 1 year. You know, and that becomes, I don't know why, it's sort of some culture thing or something related to that. And then sort of this company pitched the idea and they receive funding recently in terms of where they are converting the security deposit to AMI, something of those sorts. So you are paying to the company EMI, but they are paying upfront cost. So there are, I mean, the reason I'm sharing is, there are very nuances in real estate in different part, and what you're sharing, the insight like 600 square feet versus built for renting, built for sale is different, which is very interesting.
I think in India, there's a lot of innovation happening in much smaller way, but there's a lot of innovation happening. I see companies approaching us telling, why don't you take rental bonds with us where you don't need to charge a deposit. Something goes wrong, we pay for you, and your premium is hardly 500 rupees or 1000 rupees over the rent.
Rental bond, come again, what does it mean? I didn't catch.
You have rental bonds,
Hmm.
so instead of you charging deposit,
Okay.
it's basically the risk premium, right? So they charge you a premium of 1000 rupees uh, per month for the
Hmm.
tenant,
Okay.
cover the risk for you,
Oh, interesting.
including even non-payments.
Yes, wow, that's nice.
Right. I think India is in this phase right now. A lot of people are trying to innovate.
Mm-hmm.
Many different solutions. Very interesting agreement signing processes. I mean,
Mm-hmm.
we all know there are digital contracts, but there are companies who are trying to change how a digital contract works. How easy can you customize it, right? I think India is in the phase where you will see in a year or two, this prop tech industry is going to drive crazy in India.
So tell me, Vijay, yesterday I was discussing with my co-founder's partner for my other business. We were moving office and we were like thinking, why do we have to pay a broker? So we are moving one office to another, and it was with the help of a broker. And we were just debating, like, why do we have to pay broker a fixed percentage of the commission of the rental? His service is limited. He why does his incentive is linked to percentage? Is it because someone started this phenomenon and now everyone is just, because if you look at it, it's, why does it need to be linked to a percentage, right? I mean, we were just debating, but we don't have an answer. I think that area needs some reinvention or something.
I think you're pointing at a genuine problem, but actually there is a lot of nuance to this problem.
Mm-hmm.
In the US or in many different states, brokerage is compulsory and it goes up to 5%. However,
Oh.
you like in India, you can't have brokers without any qualification there. You have a license, you need to work for 3 years under somebody,
Hmm.
and you create that value. And there's a lot of documentation to be done with different authorities, right? They
Mm-hmm.
do that.
Yeah.
But actually, before I started this business, coming from a tech field, I used to always believe you will eliminate middlemen and you create value. And I think in real estate, that's not the right approach because the financial transactions are huge and we are all looking for somebody in between to bring that comfort. Now, we deploy a lot of brokers on ground, even though I could have avoided them and get to the landlord directly.
Mm-hmm.
You know why? In the process of negotiating a large deal, I don't want to lose my relationship with the landlord, right?
Mm.
And there are sometimes you need a middle person to close the deal for you, right? Getting it short, I mean, keeping it brief,
Mm-hmm.
the human value is there when the transaction size is a lot.
Mm-hmm.
But if it is purely for discovery, I think it is redundant.
Okay. So, so little side question. So this no broker platform, they're doing pretty well.
Correct.
Uh, but is it I think they don't involve any broker, or you just go list, you just find the listing, contact the owner directly, and I think it's a lot of convenience.
Right. See, no, this aggregator concept has always been in India, I think from
Mm-hmm.
last 10, 15 years.
Mm-hmm.
What did No Broker do differently is it had a fleet of ground staff, right?
Okay.
So they were going around getting the properties, somebody showing the property if a tenant wants to go see, and there's a relationship manager attached to that.
Okay.
Point being, I don't think they've solved it digitally. They were still
Okay.
people heavy, right?
Mm-hmm.
At some point, when you don't break even with that cost, you will again expect the landlord to do that and you just want to connect people.
Mm-hmm.
I personally doubt if that is the right approach. I I mean, see, in Kots, we run 3 lakh SFT with us. You
Mm-hmm.
know what's interesting?
Mm-hmm.
I have my own personal family house in Bangalore, South.
Mm-hmm.
I can't rent it if somebody vacates there. I can rent all the 800 flats with us with ease, but that one property of my own, I can't do it.
Why?
You need a professional operator creating content, showing the flats, taking the leads, taking the calls, right?
Mm-hmm.
You are a working professional and people are just calling you randomly for a toilet board, you have to go show them. It's not a possibility. If it is one flat, you can't get it repaired with ease,
Mm-hmm.
right? Now, this you ask no broker or any other company to take, they come with a certain fee, right? So initially they might charge 5,000 rupees because they're burning somebody's money.
Mm-hmm.
At some point, they will start charging a lot more. For example, if you ask urban company or no broker to do your painting, right?
Mm-hmm.
I don't know if you've tried. For a 2 BHK, they would advertise it somewhere around 10,000, 15,000, but in reality, it is much higher.
Oh.
Right. Now, the point being here, I think that convenience cost will go up in India with time when people stop burning the VC's money.
Mm-hmm.
Then you will realize as a landlord, why don't I do this myself? I'll save this money.
True. True. But also, Vijay, in this space, maybe can be called prop tech or
Yeah.
something, prop tech, um There are a lot of negative news which has come into the market, I think, from last 6, 7 or year, like the case of Rahul from what's the company he started? Housing.com,
Yeah.
and the new one where
No.
Chandani. Yes, that one. A lot of transparency issue, money going here and there, and there are a few more companies and startup. So, in this space, how have you seen as of now the funding situation, etc., etc.? With this sort of many negative news were part of the ecosystem, not just PropTech. Also, I mean, there were others too, but yeah.
I think there are few privileged people like Rahul Yadav who could walk off with something like that.
Mm-hmm.
But otherwise, for an average entrepreneur, funding in India is not easy, right? If you have a proven model, yes, you will get the funding. But if you are capable to have a proven model, you know you can drive the unit economics, right? I think those people are doing well even now in this market. It is the problem of the first time entrepreneurs or kind of people who don't have a working uh, profitable model who are struggling, right? Otherwise, I see there is good enough funding for the people who have the values and people who can create value, right? In PropTech specifically, if you talk about this market, funding is not easy. You don't have many. I mean, unlike SaaS, people will think twice to invest in PropTech.
True.
In SaaS, one advantage, you will know at some point you have a 70%, 80% gross margin, and it can scale to the whole world, right? Anything related to physical real estate, there is a limitation. Rules and regulations change for every geography. So the investor who comes into the picture is always thinking, what are my next chances of exit, or who's going to fund this business in the second step, or would this guy scale, give me the 10x, 100x scale? I think PropTech becoming 100x is a challenge.
So, for your venture, Vijit, how did you manage to get capital? Friends, family, investors?
When we started, we were thinking in the general lines, like any startup, that you have a working model, you'll get a VC, then you prove the model, you scale it to one city, 10 cities, right? And then reality struck us very badly. We've realized uh, VCs don't fund into physical real estate businesses so easily. At least with the ease they do a tech company, right? And you have a limited people who look into this field to even invest. And real estate is a huge capital intense business.
True.
It's not like if you get a million, it's nothing, right? It'll just burn in a month,
True.
right? So how we did the first project, yes, took a lot of help from my friends and family. The second project, we had some NBFCs who were kind of taking our cash flows. We were positive from day one, so that kind of helped. I think after 2 years into the business, banks came into the picture because we were growing at a 2x, and we had good transactions in our books. Today in India, there are few options for debt-based financing if you have the transactions with you, right? That's how we actually kind of managed. But it's a nightmare to manage such intense cash flow business.
Yes, I can imagine a lot of upfront cost. You have to set up everything from interior
Yeah.
structure, everything. Yeah.
And imagine you survive COVID time. It's a unbelievable thing.
How did you survive COVID time?
To be honest, there were benefits because of the COVID, not
Okay.
in terms of the business.
Mm.
I first thought this is dead. This is done.
Mm.
I mean, our lives are done. There's no way I can pay back the money. For 2.5 years, it's just me and my wife, only two employees.
Mm-hmm.
So we divided the work, like one is in the office, one is outside, right? Not even like departments.
Mm.
You don't get any team or any employees in that time because people were dying everywhere. You're not supposed to meet another person, right? But you know what opportunity it gave, because we know we were dying, it gave us opportunity to do extreme steps
Mm-hmm.
to survive, right? So we started going very deep. What should we do differently to survive next 6 months? So we saw that a lot of PGs and co-living people, they didn't want to stay. I mean, tenants who were staying there, they wanted to stay separately. Now, in that time, a lot of people were more hygiene conscious and they wanted cleaner spaces, right? So that was an insight we got. We started marketing to those particular people. Surprisingly, we managed to have 70% occupancy throughout the COVID. Not just that, we grew 2x from 2019 every year, including the COVID years. Now, this kind of helped us to get better deals with the landlords because they saw our performance and they know in COVID they'll anyways not do any business. So they were also giving to us at a fairly better price. So the rents were reasonable to the tenants as well. Yeah, kind of helped us.
Mm-hmm. So in all of um in all of your inventory, do is there any property you guys as a company own, or it's all sort of um leased out and then you're
Yeah, we work with only one model of 9 year lease.
okay?
Every project we have has a 9 year lease with the.
And so one question which we keep getting, from our listeners is like, if someone wants to start in this space and become your competitor, what do they need to do to get the first, property leased out and then further build a
Right.
business around this?
I remember 2 days back also somebody just connected to me on LinkedIn and just randomly called me and we had like a 40 minutes call. I was just explaining him what to do business.
Hmm.
Uh, First thing, there are very high chances you can't scale in this space.
Hmm.
Many companies could not demonstrate that, all the funded companies. Reason being, physical infra, when you want to change something in the physical infra, it takes time. Like you do one building and you want to do another building differently, it takes 2 to 3 years, right? Building can't come suddenly, right? And a building basically is an investment of couple of $1 million. So you might find one or two investors who will put that money on your projects, but not as a pattern. Then as a pattern, you will end up taking regular projects which are already there. So if you want to differentiate in the physical asset, it becomes extremely hard. Then your options are doing this with tech and discovery. Now, somebody who's starting off to compete with 99 acres or Magic Bricks or No Broker in the discovery is not easy. Their SEOs would have been, I mean, you have they have millions of listings with them. Their SEO is pretty deep. So for you to crack it in that way, I think it is extremely hard. I would advise somebody to be focused on a specific niche. For example, instead of just taking a 1 BHK or 2 BHK, try to take an approach of solving for a specific consumer. For example, you can take low income workers. Housing in urban dense localities like East Bangalore, lot of migrant workers also don't have good accommodations. So if you focus on that particular niche, you will be able to grow in that niche. Or you can focus on senior living, or you can focus on possibly a subsegment of a student housing. I think that's a very good approach. Uh, and you don't really need to build a lot of tech these days because there are so many companies who are giving that entire tech for you on a SaaS based, and it's quite cheaper to get it from them than you building it yourself. So you can use their tech, find your own niche, and build a extremely good optimized operations model. I think that's the key for this business.
Oh, true, true, true. Um, you touched from student to senior to low income. One of my favorite business model, there's this company called Saffron Stays, where if you have sort of, I think it comes under luxury, or if you have built such houses, you can put up for rent, and um, which is very interesting in terms of like an Airbnb, but these are just better properties.
Mhm.
S- So I think, yeah, they have a couple of in South India as well. So yeah, interesting. So then moving on, Vijay. So what is the next milestone you're looking at? After all this, you have 3 lakh SFT. You want to double it down, move out of city, expand. But as you said, scaling is physical asset is a challenge, right? Nuances, everything is different. So, what is the next milestone you are looking at?
First, since we have realized uh, building a real estate company is not easy to scale in all the cities, we have kind of toned down our approach to the city. But what we are doing differently is we are optimizing for profitability rather than unrealistic growth, right? Because in real estate housing, out of 3 to 4 pin codes, you have a market of 100 crore ARR. So it's a huge market. So you really don't need to think of how do I go to 100 cities or 10 cities. You focus on one city or few pin codes. I think there's a lot of large market for that. So now what we are focusing is we want to move to the asset design and development part of the business, where if we can create products from scratch using our developers and partners, investment partners, we will be able to create much better differentiated asset in good locations and good localities where the rental yields are high. That gives us a strong kind of moat for this business. And parallelly, we want to be completely digital end to end, uh, including not just the service and apps part, but from the discovery to operations to the finance model. So possibly that will give us another advantage in optimizing the value creation for our tenants. Right. So these two directions we are taking. We have just signed up with few investment partners to take up 1 million square foot in the upcoming areas in Bangalore. So you will possibly see a lot of our 1 BHKs, 2 BHKs coming into picture. Um, Second part is we are also trying to differentiate the categories. Earlier, we were only doing 1 BHK flats. Now we are focused for the target audience of 25 to 35. Hence, we are doing studios 2 and 1, like different categories in this.
And typically, how much time does it take, Vijay, from beginning till the end to make a one sort of this complex apartment, or what is the incubation time like building the entire thing?
Right. If you are looking at a project level, it's a
Hmm.
2.5 year project,
Oh wow.
which you don't have that privilege. So what we do is we map the micro markets in advance.
Hmm.
So let's say our target is to have 1,000 houses.
Hmm.
We sign up 5 projects parallelly. So
Okay.
even though you wait for 2 years, you get 1,000 flats in that area in that micro market.
Hmm.
Yeah, so you need to be pretty well planned. You need to build your partner ecosystem where multiple people are investing. It's not possible for few people to invest all the projects, right? You need to have different demography of investors with different land parcels investing parallelly, and you need to commit and perform and show.
A lot of compliance also, right?
Yes, a lot of compliance, especially East Bangalore has a big problem of deviation. We are trying to address this problem.
What,
We,
sorry, what do you mean by deviation?
they could have not followed the norms, or they took some shortcuts.
Ah, in that way. Okay. Hmm.
Yeah, or the municipality will have a lot of sustainability rules,
Hmm.
so they would build for the sake of building it, but it's really not a working solution for the sustainability, right? So we are actively working with our investment partners to look into sustainability, water conservation, energy efficient buildings, which will give us value in the next 10 to 15 years, right?
And any plan to raise capital, Vijay, or your guys are sorted?
Uh, See, in real estate, what I've realized, capital is the credibility you build. The more credible you are, capital follows you, right?
Mhm.
Initially, we struggled, but now we see a lot more landlords trusting us, seeing our performance for years. They're coming to put all the investments on the projects
Mhm.
without we putting a penny from our side and without any guarantees from our side. So we don't need investments on the any form of investment on the projects anymore. So we are only focusing right now on making it just a profitable machine. So we don't have any capex going forward.
Awesome, awesome, awesome. Very interesting, Vijay. Many things which I still need to learn in this segment. It's a huge segment, but thank you so much for your time. Helping the listeners and me understand. What all is happening. Very interesting space. Anything you want to share, which I may have missed, you want to share with the listeners?
Right. I think we all have to participate in the India story. India in the next 10, 15 years is going to transform. This is an opportunity for all of us to contribute and change our lives. So let's put our capabilities to best use, right? And keep innovating. Thank you.
Awesome. Thank you, Vijay, for your time.